welcome to the. I guess I'm really happy to be part of the inaugural or the maiden voyage here, so to speak, for the analyst, the guest analyst program here at Eightcap Trading Zone. So why don't we just dive right into it? Most of you hopefully will have seen the video that was posted on Sunday, which is basically my look ahead for the week. And I'd like to think that I'm doing it in a very different format than what most people do. And I don't mean the video format, but more in terms of the content. A lot of the look aheads tend to be more looking at news events and saying, well, you know, unemployment's coming out this week, CPI data, et cetera, and we expect X, Y, and Z to happen. And, you know, those make for great talking points and whatnot, but oftentimes it's kind of difficult to really grab anything from that that's going to allow you to make a trade based on that, make an adjustment to an existing trade, maybe make an adjustment to your portfolio, et cetera, et cetera. For me, since I'm a short-term trader, everything that I ingest and also distribute to my clients has to be something that's actionable. The old adage in the industry is that the longer it takes you to describe your investment and or trading thesis means you don't have one. You should be able to, you know, basically boil it down to one or two bullet points in a modest paragraph, especially on a swing trade or, you know, even intraday trades, because at that point, the fundamentals aren't necessarily the driving force. It's price action, it's price levels. So that's how I approach what I'm going to be bringing here to Eightcap over the next few weeks is my approach to trading the markets, and it's truly trading. I'm not going to be talking about investments and things like that, even though I do that, obviously, for my own capital, retirement plans, et cetera, but the sole focus for me each and every day is trading the markets, primarily the S&P 500, 10-year notes, a handful of FX pairs. I don't trade crypto myself personally, but I have many clients who want me to analyze crypto, so I will be more than happy to provide you my technical view on Bitcoin and Ethereum, and I will also highlight a few, you know, very popular broad-based ETFs. So, you know, depending on what you trade, I'm probably going to touch upon it, but my overall feel is that you can really only focus in on a handful of instruments and expect to be effective at it. Those that are looking at everything under the sun, I'm not sure how that's humanly possible, because I don't think it is. And as a result, I'm not really sure that they're going to be producing any insights that are going to really have anything worth, you know, me listening to. So for me, what you have up on the screen right now is, well, actually, let me back up for a second. Many of you have had the ability to sign up for a trial to one of the products that I offer, which is the daily market forecast, which is basically this right here. And if you've taken advantage of it, fantastic. It is the easiest way to kind of get your feet wet as to what I do and what I provide for my clients. This is a very entry-level product, but there's a lot of really useful information on here. And so if you had an opportunity to sign up, or if you have not, I encourage you to sign up for a 2-week trial. You'll get this every day. Be coming out on Sunday, which is here in the US. It'll be Monday morning in Australia, and we publish that through Thursday. Each day we publish it after the New York close or right as the folks in Australia are coming into their trading day. These are the major asset classes that I follow, as you can see. And while I'm really trying to do there is give a general bias where I think prices may be going over the next 12 to 24 hours, maybe a little bit longer, and then the key levels that are going to be the drivers as to get the prices to go to those, or to get the prices to move in that particular direction. And then I'll also put in a little bit of commentary here to kind of add a little bit more color. So that's available to you. If you've been getting it, fantastic. Then you're already going to kind of know what we're talking about. So what you'll note, actually, let me just say one more thing, because this is all part of me kind of giving you a sense of how I approach the market. Because if you don't understand how I approach the market and I dive right into it, it's probably not going to be terribly helpful. So everything I do is based on support and resistance levels. that basically form a support and resistance channel, a horizontal channel. And I'm looking at that across 4 different time frames. Shorter term, medium to long term, and then long term. And all of those levels are significant for sure, but obviously the higher you go out, the more significant it is. The levels are mathematically calculated. That's the key thing that I do differently. I'm not doing anything subjective here. I'm not saying, well, I'm going to draw a trend line in here because I think, and that's the problem that most traders get into. They start thinking as opposed to letting the market tell them what they should be doing. I'm using actual price, volume, frequency, time frame data to calculate what I consider and what tends to be areas in the market where you're going to get reaction, whether it be reaction higher, reaction lower. Those levels are going to be significant. The point I made in the video, the first thing I made the point of on my video on Sunday was as follows. You could be a great technician, and trust me, I'm a technician at heart. I came up through the ranks as a trader. I moved out my time frame as time went on. I did Elliott Wave for a number of years, very familiar with Fibonacci, and I would say I'm a pretty darn good technician. The problem with a lot of that, though, is that it tends to be subjective. It's how I'm interpreting the use of the tools itself. And again, there's nothing wrong with that. There's plenty of technicians out there that do that, and they're very effective. The major challenge, though, comes from this. You might be doing some really, really wonderful technical work, textbook, technical analysis 101, spot on. But unless the rest of the marketplace is looking at the similar setup and similar levels that you've identified, it probably won't matter, because in order to move prices from one point to another, you need a lot of people and a lot of participants and a lot of money flowing through the market to get prices to go from point A to point B. Therefore, my objective when I designed and created these levels is I want to know the points in the market where most other people that are larger than me and then larger than collectively most retail traders and most institutional traders, I want to know those price levels because I know the market will get a reaction, and I want to hitch my wagon to that move because I know that most other people are looking at it. And that's the key difference that I think I'm going to be bringing to the table for you. So again, that's available to you. We can come back to this in a little bit. This is actually today's. I already posted it and sent it out. So if you sign up after this, just know that you won't get another update until tomorrow morning, Australia time, or late in the evening, Europe, or if you're in North America, up in Canada, or down in Mexico, or wherever, you'll get in the afternoon Pacific time. So let's go first to the S&P 500, because the way I look at it, the S&P 500 is kind of that and 10-year notes. They're the big kind of granddaddies of the market. What they do largely impacts what other asset classes do. Certainly impacts FX, certainly impacts stocks, obviously. So I spend a great deal of time trading the S&Ps on an intraday basis, but the levels that I'm looking at can be applied to any time frame. Now, I know that the chart you're looking at right here might look a bit confusing, but these are the levels themselves, the Aspen Trading support and resistance levels. And again, as I said, there are 4 sets of levels: the green levels, which is the lowest time frame, the red levels, the next time frame, I'm sorry, the orange time frame, the orange levels are the next time frame up, and then the red levels, and then to the purple levels. And you can see them all drawn on here. And again, sometimes they overlap. Obviously, on the shorter term time frame, you're going to see those more often because they're taking in a shorter slice of time. So for me, I'm looking at the S&Ps really clearly right now. I'm looking at 45.14 and 44.05. 44.05 has been a key level this week. I mentioned it on Sunday. Once we got above 44.05, we held. We've moved very nicely higher for the rest of the week until we ran into about 45.80 today, which oddly enough is a Fibonacci retracement, a 61% retracement of that initial sell-off we've seen since the beginning of the year. I'm not surprised. Most retracements do go back to the 61.8%. That doesn't mean I traded it there. I didn't get short, but that's certainly a level that we need to get through, and that's independent of the support and resistance levels that I'm drawing into my charts. So again, what does all this mean for you tomorrow? Well, what I do is I take these levels and then I transpose them onto my intraday charts. And you can do it just simply by clicking onto the lower time frames, which you see here. The challenge is that these are calculated based on daily bars. And while our mathematical equation gets it pretty dang close, if I drop this down to, let's say, an hour chart, the levels are going to be not quite the same as they were on the daily chart, but they're going to be pretty dang close. You still got the 4406, 4405 level in there. You've got the 4572. So by and large, they're going to be pretty accurate, but you want to be taking your clues from the daily data. But let's just stick with the hourly data for now. So you saw where we capped out today, 4580, 4578, right in there. Therefore, it's entirely possible we could move all the way back towards 4406. That's where I would be bullish per se. You always want to be looking to be buying into the support levels and then fading or selling into the resistance levels. That can be really hard to do because you're usually going against the trend, but those are the areas where you're going to get the most reaction. It takes a lot for me to sit there at times and press that button going, why am I buying it right now as prices are moving lower? Or why am I selling this right now as prices are moving higher? But what I found time and time again, those are where you get the most robust entries and the most robust reaction in the opposite direction. Just think about it. Once prices make that turn, it's obvious to everybody at that point in time. Now you've got more of a kind of a jockeying going on, more buyers and sellers kind of competing. Therefore, you get that choppy move that's not going to be quite as clean. But those that are selling into a support and resist or into a support level, that's all they're doing. They're selling, they keep pushing, and then the minute prices stop, and let's say I'm buying, market usually reacts very quickly the other way, and that kind of creates a mean reversion trade, as I would like to say. So again, going into tomorrow, 4406, 4580, probably to a lesser degree, and I'm going to go back to the daily chart because that's where you're going to see the accurate levels. 4406, as I said, I've got a minor support level down at 4530. We might get down there today because right before the market closed, Facebook announced earnings and the S&Ps closed pretty weak. They closed down on the day, and that could have a ripple effect into tomorrow's session. So if we get down to 4406 tomorrow, it doesn't mean you blindly buy it, but that's a level you want to be looking to be a buyer potentially. But if the tape is really heavy, what are we going to do? We're going to do just the opposite. We're going to let prices break below that 4406. Hopefully they come back and retest it a little bit. And if they don't go through, I want to be selling it. So that's the scenario I would be looking at in terms of the S&Ps tomorrow. So let me just stop there real quick. And I really encourage people to ask questions on this presentation. I don't want to just be talking to everybody. I want to have a dialogue. What I'm talking about here may not be familiar to everybody, and that's okay. I want to be here to kind of help clarify, make sure you understand what it is that how I'm approaching the market so that you can apply it to your own individual trading. So I'm going to pause there for just a second and let the S&P data kind of sink in there, and you can draw these levels on there. Now, what happens if we do break below 4406? Well, the band right now is from 4406 down to 4292. It would be reasonable to expect that if we break below 4406 and hold, we are going to traverse lower, maybe not immediately, but over the course of several hours or a day or two, we're going to traverse down towards 4290. We're going to basically be within that channel within a bearish context. That wouldn't surprise me at all. I'm not saying that will happen. I'll make that judgment tomorrow when the market opens and we get a better sense of how the market's actually trading. So I'm just going to take a brief pause there. Rob, I'm going to look for the chat button here. So let me make sure I have that up just in case somebody's typing something in here. It's been a while since I've used GoToWebinar, so let me just refamiliarize myself here. Let's see the chat button. Where would that be? Oh, there it is. Cool. There it is. I'm going to move on. Nobody typed in a question regarding the S&Ps. You can see these are the major markets that I follow. I have them all tabbed up here. Let's go to the euro. A lot of people probably, actually, you know what? Probably got a primarily Aussie audience. Let's go right to the Australian dollar. Again, just a great evidence this week of prices holding a key level down around 0.70. It was actually 0.7004 since adjusted. It's now 69.89. But I called this out on Sunday. If we get back above 70.04, we're moving higher. And we moved a lot higher. We're at 71.34 right now. Upside targets were achieved, which was my initial target was the green line, 70.64, and then up to 70.82. We've since exceeded those. Great trade right there, and you can see that level was held, back here in December too. So again, none of these levels are drawn on after the fact. The levels where you see them were there at that point in time historically as well. So it's really helpful for you to know that these levels are extremely effective. And you can see the same exact setup almost in the euro. I told, again, in the daily market forecast that I sent out on Sunday evening and also discussed in the video, anything above 111.87 in the euro, I want to be long. Again, with the upside target of basically where we topped out today, 112. Yeah, put my glasses on for crying out loud. 113.25, if I've got that right. Yep, 113.25, nailed it. Now, for right now, I'm not doing anything in the euro. It's back into that consolidation zone. You'll find that I'm always looking to fade the extremes if it's coming into one of my levels. Same thing was seen in the New Zealand dollar, Kiwi dollar, as I always refer to it as. Told clients anything above 65.92, which was again the lower green band. If we move back above that level, given that how oversold we were, prices are going to move higher, and they have moved higher. Not quite as much as the Aussie dollar and the euro dollar did, but they did move higher for sure. Now, the ones that I'm waiting on right now, because I'd love to trade dollar yen, and we got dollar yen kind of in a sideways chop right here. Until we get above some of these key levels like 114.45, certainly 115, and certainly 115.40, I believe that is 115.45, kind of in sideways chop. I'm not terribly interested, but I think if we get above, let's say 114 or 115, I think we get a real good shot at taking a run at 115.45 and then higher. So I'm not going to do anything in dollar yen right now, but I am going to be watching it pretty dang closely. Crypto. I know a lot of people out there trade crypto, so let's go to Bitcoin. No real mystery here. We have had Bitcoin kind of tagged off and on this move down, short from 51,230, or at least advising clients here. Certainly advise clients that once we broke this purple level, remember purple is the highest time frame in the support and resistance levels we use. That's levels at 39,440. We broke that, moved lower. We came back, tested it again today. I think we moved back lower in Bitcoin. I don't trade it myself personally. I don't own any crypto, but this is how I'm advising the clients that I have that trade crypto and want my insights as it relates to the Aspen Trading support and resistance level. So if I was, looking to, if you forced me to make a trade right now, I'd be shorting Bitcoin from current levels. In fact, I would have probably shorted it into that level, knowing that the odds of it getting through pretty slim given the bearish nature of the market. Now, Ethereum, on the other hand, not much I would do there on Ethereum because it's been stronger, but again, it's in kind of no man's land. It's above these dotted lines, and the next dotted line's all the way up at 34.10. So we're kind of in this no man's land. These single lines that you see in here, I'm not going to get into the details of those because it would just overcomplicate things. So just, politely ignore them for the purposes of this presentation today. But for me, Ethereum's kind of in no man's land. It is stronger than Bitcoin, but that doesn't mean anything. It's stronger, but Bitcoin's weak. So I wouldn't be doing anything with Ethereum right here if I was looking to put new money to work. I wouldn't know what that trade would be. 10-year notes, that's another market that is really critical. I know a lot of people don't trade 10-year notes. They probably think they're stodgy and boring, and they can be, but let's face it, 10-year notes is where money is priced on a global basis, where money is priced. How money's priced is incredibly important. If the cost of money goes up, that has an adverse impact on stock markets. If cost of money goes down, that too has a knock-on effect. So 10-year notes, really, really key. And again, you can see just how robust they were at the beginning of the year once we got below the purple level, which had been killer support all the way back into March of 2021. And it tested it a couple different times and eventually broke, and it's never looked back. But right now, I'm tempted to go long above 128.05, which is the upper band of the green zone. And I think if we get above there, we go to 128.18, and I think we could, if we're lucky, we can get above 128.18. We go all the way back and we test 129.31. So that's how I'm conceptualizing my view and how I might trade 10-year notes. Let me see, what other asset classes do I have in here? Dollar index. Everybody likes to look at the dollar index as a good barometer, especially if you're trading the euro or some of the other major pairs. You know, same thing. It's almost a mirror image of dollar yen. We're back in the chop zone. Had a great move late into 2021. I'm sorry, in middle of January. This was the great move we had in December of 2021. Another spike higher in the early part of 2022, but we've gotten back below 96.90, which has been a killer level. It's dictated what we've done in FX, and it will continue to dictate. So till we get back above, let's say, this orange level here at 96.42, kind of neutral. I mean, maybe a little bit bearish, but overall, the trend is up in the dollar. Once we get above 96.42, I'm going to start turning a little bit more bullish. Probably look to start shorting the euro again, shorting the Aussie dollar. And if we get above 96.90, euro's going down hard, and the Aussie dollar probably will go lower as well, especially if we're in an environment where we have weaker equities, which is a very distinct possibility. This 7% rally we've seen off the lows is impressive, and I think it's wonderful. I'm not so sure that we haven't seen the end of the volatility and maybe even the end of seeing some lower levels. But again, as I said at the beginning, I try to keep my opinions to a minimum because they usually don't make me very much money, because my opinions are just that. It's an opinion. Unless it's shared by the rest of the marketplace, it probably won't have a whole lot of impact unless everybody else happens to have that same view. So for me, I'm keeping it very objective. Unless we go back below 45.05, 45.14, S&Ps are bullish for right now. I think we go down and test 44.06. If that happens, I might get bullish. We get below 44.06, then I become bearish. And I did all of that without having to read a news story, do deep dive analysis on fundamentals or macros. I did it all based on what happens if prices move above or below this particular level, because if they do, that suggests to me that the market will begin to move lower and or higher depending on how and where that level is. So I think I've had you drink from the fire hose here for just about a half an hour, which is about the time we have for the content portion of our webinar. Again, if there's questions, please feel free to drop them in the chat or respond to maybe some of the emails that I send out with the daily market forecast. We will do another webinar a week from today at the same time. We'll do 3 more. I hope the next time you have more familiarity with what we're doing and you can bring some questions and let's have a dialogue as to what's happening here so we can really, really get a good sense of how to use this in your individual trading. So, yeah, go ahead, Rob.
Yeah, there is one question from Bruce in the chat. So if you could just answer that, that would be awesome.
That'd be great. Yeah, let me take a look. It's interesting. I opened up the chat, Rob, but I don't see a question in there.
The question is just wondering if the support and resistance template is available on MT5.
Oh, there it is. There it is. It is not available on MT5 right now. It's only available on TradingView and MotiveWave. We're basing future versions of the software in terms of platforms that will be available completely by demand. Right now, all the demand for the most part is TradingView. Most people want TradingView, therefore that's where we've written it to. So you can get it there. Maybe it'll be available on MT5 in the future, but we haven't had a whole lot of demand for it just yet. But you know, that can change, and that's where really the big push for the business is going forward. Having these levels on your chart so that you can put them on whatever symbol you want is really, really key. Once you get to learn how to use them, trust me, you will not want to have them. I'll give you a great example from last week. Last week, right into the Fed meeting, and I'm going to expand this chart out a little bit. This level you won't see this level on here because the levels update periodically as our time frames change. But last week, 44.44 was the really, really key level, and you're probably not going to see it on a daily chart. So I'm going to pull it down to an hourly chart. And again, as I said, you're not going to see that level drawn because, again, that's last week. Levels change. And it was, yep, right here. Here's the Fed meeting. At this point in time, and I can go back and show you, but trust me, this is exactly it. 44.44, right there. Fed meeting happens, they make the announcement, prices run up, hit 44.44, where I went short, as did many clients. And for the next hour or two, we went from 44.44 and ultimately bottomed out at 42.66. Did I catch the whole move? No, of course not. Nobody catches all the move. It's, you know, fear and greed always get the best of us, but I caught a big chunk of that move. This is why you want to have these levels on your chart, because the market does react to them. It's a simple fact. You'll see it time and time again. So for those of you that don't have it on your platform, here's what I would strongly suggest you do in the meantime. Go to the if you're taking the trial to the daily market forecast, draw these levels on your chart. Draw 45.48 on your chart for tomorrow, 45.05, or whatever market you happen to be following. Draw them on your 5-minute chart, your hourly chart, whatever it is. I will guarantee you that the majority of the time these levels are hit, the market will react to them. It will react. There will be a tradable opportunity. Sometimes it's fleeting, meaning it's an intraday type trade setup. Sometimes it changes the whole direction of the trend and suddenly you're kind of picking a bottom or picking a top. They are uncanny in terms of how effective they are. So take the time, draw them on your charts, or if you don't want to be bothered by that, because frankly, it gets kind of repetitive and boring, always having to update your charts every day. And you only get them for a handful of symbols here. Get the add-on for TradingView and you can have them on any symbol you want. So Bruce, I really do appreciate the question, but for right now, MT5 is not one of the platforms we have, but that could change.
And just from an Eightcap perspective, we are currently integrating with TradingView. So the Eightcap prices are on TradingView at the moment. You can't trade them, but that will be a new feature. That will be a new offering that will be presenting to the client base probably in the next two months. So we're working on getting that all up and running. So you will be able to trade from TradingView quite shortly.
Perfect. Well, that'll be great news. So that's all I have for today, folks. I will be back next week. Keep an eye out on the daily market forecast, and then I'll have another video that I'll get submitted to Rob over the weekend, and I'll be out on, you send that out on Sunday. Is that correct, Rob? Or Monday morning, Australia time?
Yeah, so we have the trading week. The trading week ahead goes out on Monday. I'm obviously in the UK. Monday morning, early, just before the Asian market opens. And this video will be sent tomorrow once we've topped and tailed it and made it look nice.
Sounds good. All right, everybody. Well, thank you very much. Rob, thank you for organizing and getting it all set up. It went flawlessly. And I'll look forward to seeing everybody next week. Have a great week.